All right, here we go. What's up, Entrees? Hope you're having a good weekend. Give it a few minutes, let some people come in. As usual, we'll start right at 5 p.m. Eastern time. So, what's up, Dino? I'm good. How are you? Anybody catch that Chiefs game yesterday? Or maybe there won't be a lot of people in here today. I think a lot of people are probably busy watching football. But what's up, Josh? I know Josh caught that Chiefs game. Nice. That's awesome. That's awesome, Entrees. That was an intense game. Honestly, I thought I wasn't really that happy with the way the Chiefs played because I didn't think they should have to have such a close game against the Broncos. But oh, frig. Thanks, Benito. Yeah, I was worried too, Josh. That one came down to the end of the game, and the week before that Cincinnati game really pissed me off, or not Cincinnati, the Cleveland game. That game was very upsetting, to say the least. If you guys can do me a favor and tweet out the link to the live stream or post it on Instagram or maybe even on Facebook. If you guys have a trading room you're part of there, let's get as many people in here as we can. Or if you want, you can just go retweet the tweet that I posted. That's always the simplest way, right? What's up, Supra? Supra Sam. What's up, Raul? Thank you, buddy. All right. Well, this week's Sunday prep is going to be brought to you from me sitting down. Feel like every week I do these, I'm standing the whole time. And so I'm going to try it sitting. We'll see how it goes. Thanks, Ryan. All right, guys, so let's get it started. This is Ricky Analog, and this is this week's edition of If This Then That. Of course, I'm just calling it that because that's really what we do here is we just create a bunch of if this then that statements. And before I get started, I do want to talk real quick about TrueTrader has some partnerships with some companies. You will never ever hear me recommend a company or a product unless I personally believe in it or we use it. And TrueTrader has partnered with a few. We got BEKE, which you guys are not familiar with them. These guys are literally the best way to get historical stock data so that you can define your setup, or if you have an idea that you want to back test and see if there's an actual edge. These guys are hands down the best I've come across, and the product itself is extremely powerful. So highly recommend you check out BEKE. The next company that I can't recommend enough is Scripts to Trade, guys. These guys, let me see if I can move out of the way of the logo. This company, they create custom indicators for Thinkorswim and TradingView, and they probably are going to start creating them for other platforms as well. I know NinjaTrader has its own custom script or coding language, and so does TradeStation. And so these guys are not only do they sell already created scripts that a lot of people use, like the VWAP Boulevard and the volume forecasting and the net and the MA Finder, so many different products that are amazing. They also will create custom indicators for you. So if you have an idea that there's no solution for, these guys will do it, and they can do it fast. And they're not only that, but they're traders, so they know. That's the hard part, is finding coders that speak the language of a trader, right? So like these guys are the best of both worlds, and they really, really do a great job. The other company I wanted to talk about is Cobra. This is my preferred broker. Honestly, I've been with all of them, and I do have many brokerage accounts. The only one I recommend for day trading is Cobra. The commissions, the locates, everything's the best. Everything's the best, and to top it all off, hands down the best customer service as well, which you don't find at a lot of brokers. So if you check the description of the YouTube video, there's a link in there that'll get you 25% off the commissions, as well as your first month of the platform free, like DOS or Sterling, depending on what you prefer. And yeah, Cobra is the way to go as far as your brokers. And of course, Goose's midweek watch. I'd be silly to not. Well, let me get rid of that. Yeah, I'd be silly to not plug that because he's back, baby. The Goose is back. He had his little Christmas break, and he did his first midweek watch last Thursday, and it was sick. It was very well timed because obviously the market was in a funny position, right? And so who better to listen to than somebody that has years and years and years of experience, like my brother from another mother. So make sure you guys are subscribed to our YouTube channel and you have notifications turned on so that you don't miss any more of the midweek watches and you don't miss any more of the Sunday preps. Now, the reason I save Goose for last is because his midweek watch gave me kind of this epiphany, which is what I'm going to use to talk about for the intro of this week's Sunday prep. And that is, if you haven't watched Goose's midweek watch, he does this really cool thing. It's called the Goose Games, right? And enough people have been following what we do and following the way we trade and watching all his midweek watches to really start to catch on to stuff, right? So like he does this thing where instead of giving you guys the levels he's watching, he posts a chart or a ticker, and he wants you guys to put in the chat what levels it is you think he's watching. And here's the thing. Here's the epiphany I had. Most people get the levels right. Almost everyone watching that types in is nailing the levels. So why is that interesting? Well, it's interesting to me because I know a lot of people can get those levels right, and yet they're still not profitable traders, or they still struggle with somehow taking those ideas and making money from them. And it really, and if you notice the title of the Sunday prep this week, right? Great entries are useless without the full trade plan. Entries really don't matter. They do, and I'm not in no way am I saying entries don't matter. You don't want to just shoot random bullets at stocks, but by far, exits and risk management and discipline are much more important aspects of your trading than just the entries. And you can go and look into Van Tharp. He's the godfather of risk management and position sizing. You can look into a lot of other resources, and you'll find people that have done studies where they show that with proper risk management and proper discipline, you can use random entries and still come out profitable. Now, no one's recommending you do that, but it just shows you the importance of the latter part of your trade plan. So we come to these Sunday preps and these midweek watches to, give you guys ideas, but really all I can give you is the levels I'm watching, and I can talk about how I would manage my risk. But you have to create your own plan, and the plan cannot just be entering wherever you hear Goose or Ricky or whoever it is that you're getting an idea from. You can't just take those entries and not have a full plan. And here's the thing. Let's say, like, we'll get into some of the ideas later, but let's say I'm watching XYZ and I tell you guys I want to buy it at 100, and you go, I love that idea. I like the look of that chart, everything about it. So come Monday, bell rings, idea plays out, comes down to 100, and somehow, it goes to 99, and you add, and it goes to 98, you add, and then before you know it, you're down huge. And, at the end of the day, I may not have even taken the trade, or maybe I did, and I took a paper cut. Maybe I took even less than a full R loss. Meanwhile, you took something that was detrimental to your account and you don't understand what the hell happened. Like Ricky had this idea, how come Ricky's able to make money and I'm over here losing? It's because all you had was the entry. You got to create the full plan, and that includes where you're wrong. And once you figure out where you're wrong or where you would stop, then you have to figure out how much size to take with that. And that doesn't mean that, okay, maybe your plan includes scaling in. Maybe you're taking a starter and then you're going to add when it starts to work. Maybe you're going to take full size and you're going to stop below that level and you're going to let it play out. However it goes, the main point I'm trying to hammer home here, guys, is that you have to have the full plan. The entries by themselves don't mean Dickie McGeezak. You really, really got to have that risk management under control. So that was really all I wanted to talk about, guys. We're going to get straight into it, and we're going to try to move it along pretty quick today because there's a ton of ideas. And I'm actually throwing in swing trade ideas in this week, which I haven't done before. At least I don't recall any. And I hope you guys also understand that with the swing trades, they're no different than the day trades. There still has to be a full trade plan. You still have to understand where you would be wrong. But I did want to kind of let you guys into the mindset of a person that's looking for swings as well as day trades. So without further ado, the disclaimer. Guys, neither I, True Trader, nor any of its representatives are registered as security broker dealers. I am not a licensed financial advisor. Make sure you understand that this is not a solicitation to buy or sell any stocks. Everything you hear me talk about today, guys, is strictly for entertainment purposes. So here we are. This is the ES, guys. As always, we start with the broader market. Let's jump into the monthly. All right. So it's going to look a lot very similar to what it looked like last week because the monthly candles are still the same. We're still on the same candle, right? I'm going to hide the pivots right now because I don't want too much noise on the chart. So we still are kind of just stuck in that range of December's candle, right? So as far as the higher time frames are concerned, obviously one thing I always look for is, are we extended? Yes, in terms of how I define extension, right? We are still far, far off from the monthly 20 SMA. So if things happen where, certain dominoes start to fall, then there is downside room or meat on the bone, for lack of a better term. That doesn't mean, again, I always have to keep saying this, guys, I'm not in panic mode yet. I know I see a lot of that stuff on social media where people are pointing out all the red flags and this and that, but like objectively, rationally, price is still in an area where we don't have to panic yet. Now, doesn't mean you can't be planning and getting ready for if this, then that, right? Like you always want to make sure that you have your risk levels planned out. So like if the market starts to roll, or let's say you have an IRA, let's see, or a 401 or a SEP, whatever you have that's long term, right? Those things, even though they're long term, you might still want to stop out and rebuy things when they go into levels where it looks like a sale, right? Now that doesn't, I know some people out there with their IRAs may own things from very, very low prices, and those are the types of things where maybe you don't want to be taking those off. But again, this is an individual thing where you need to make plans. I'm just pointing out, for instance, I have positions that were started in the last 6 months, and those positions aren't at crazy low prices, right? So those kinds of ideas will get stopped out if certain things happen, and I will go to more cash. And then when the market does find a place where it wants to base and make some sort of productive price action, then I may start considering putting that cash to use again. But again, those are the kinds of things that there's no reason yet for me to be panicking and start doing, right? I'm just planning ahead. So let's look at the weekly. Weekly still, remember we drew this line last week, and it held, right? We'll see that better when we get into the daily chart. But again, remember, so far, big pullbacks into the weekly 20 have been what have held and have been what got us back to new all-time highs. So until that is not the case, I will remain neutral to slightly bullish, okay? We'll just call it that. And the daily chart. So remember, this is what we drew last week, was based off it was. As far as levels of support and resistance, now this is the part where I do need to turn back on the pivot so I can see my levels. Sucks that I have to kind of do that every time. I wish there was a hotkey. If somebody out there knows a hotkey where I can turn on and off a group of indicators in TradingView, hit me up, okay? As far as levels of support, obviously last week's lows, which is also Friday's lows, that is the first level I'm looking at. If we lose those, the quarterly pivot and this trend line here, okay, you got 4,600 is basically what I'm going to call it. And then below that is your monthly pivot as well as the weekly 20, which has been holding. Again, even if we keep coming lower, I want you guys to always keep in mind that it's not the pullbacks that I care about. It's what happens after the pullbacks, okay? So if this pulls back as deep as even the weekly 20, I don't care. What I care about is what happens afterwards. When we try to make that push back up, do we start to curl and attack all-time highs again, or does it turn into a situation where we do get lower highs on a higher time frame and then start to roll over? That is when I would start thinking dominoes may start falling. Until then, again, neutral to slightly bullish actually. Now remember, and this is the index. This is not individual stocks, right? You always have to look at stocks by their sector, by where they're actually trading at in their 52-week range. There's a lot of other things that go into it, but right now we're just talking about the broader market. So, and then as far as upside resistance, I'm going to actually extend this line out so that we can have it. There we go. So we'll call that 47.50 is the first level. I may actually look into Thursday's highs as well, because Thursday's highs line up with this top area from here, okay? See all that. So Thursday's highs, and then 47.50, and then all-time highs. Those are the levels for resistance for me on the ES. So moving on to the NQ. Again, it's very similar to the ES as it typically is, but it's not exactly the same. And one of the very first things I'm noticing is even though it did not make, let me zoom in on it real quick here so you can see this. Even though December wasn't able to take out, even though January was not able to take out December's highs, it's still not a good look that we made this push and then are rolling over and threatening December's lows. So as far as the tech goes, as far as the NQ is concerned, I really think that this level down here could be in play, which is it's going to be close to the monthly 20, right? So we may have a situation where we lose December's lows, and I feel like 14,000 might be in the books for the tech. And if you've noticed, tech has been just so heavy lately. All the big names keep selling off. Last week we kind of talked about how the semiconductors were one of the last remaining sectors that still had a bit of a bullish look to it, and they all started to roll over too. So like make sure you understand that the tech's been heavy, and if we lose December's lows, there could be some downside. So let's look into the weekly and you'll see it a little better. So it hasn't lost them yet, right? But last week's lows are going to put us close. Is that close to December's lows? I think it is. Let me go back to the monthly real quick. Yeah, it is. December's monthly low was 15,492. So 15,492 is going to be, yep, it is this week right here. So that was December's lows. It's holding for now. As long as it holds, we may form a base here, and this may be support we may push. If that happens, so remember, this is a bunch of if this then statements. If we hold this level and then push, I will be interested to see if that push stuffs. If it does, there may be a lot of shorts setting up. So that is one of those things that I'm definitely going to have my eyes glued to in terms of what I need to see unfold afterwards. If we don't hold this level, again, that 14,000 level may come into play. There's a lot of things in front of it, I understand, but I just feel like when we lose December's lows, the monthly 20 SMA may be calling its name. So let's get into the daily chart here. Let me turn on the pivots again. Again, if you guys know anybody that can fix this little thing for me, that'd be great. All right, as far as support, December's lows and last week's lows are going to be it. Let's just call it this 15.5, okay? 15.5s I need to hold. If we lose 15.5s, obviously you have the annual pivot as well as the psychological 15K level, which is exactly lined up with the 200-day almost. That's a very, very key level as well. So even if, here's another thing I forgot to mention. When we're talking about monthly time frames, and I say if we lose December's lows, 14K may be in the books, you have to understand that's a monthly chart. It doesn't mean it happens overnight. So even though I may think we're heading to 14K, on the way to 14K, you got to get through 15K, which is the 200-day and a lot of other support levels. So that doesn't mean I wouldn't be interested in playing bounce plays off this support down here. And I would also definitely be watching to see if the bulls show up, defend successfully, right? And again, it's not about the pullback, it's about what happens after. On the upside, you have the 20-day and the 50-day as well as that monthly pivot all in the same area. That is going to be a very key level of resistance if we push early this week. So that's the first level. The next level is going to be this 16,450, which was all you see so many times. Those were the highs, right? Even though we broke through, every time we break through, it just slams back under. So that 16,450, that's the resistance I'm looking at. And then of course, all-time high. So those are the levels. Let's get into the cryptos, and that'll sum up the broader market. This is, I think last week we were talking about this, that it just had barely triggered the long and then slammed back down. So again, this is not looking very, very strong at all. The bulls have a lot of work cut out for them to do anything that's going to make me be long biased on any of the crypto equities, right? So honestly, I feel like all pops back into the 20-day are a good short opportunity on wherever the equities are trading, the Maras, the Riots, the coins. And if we come and lose last week's lows, I feel you obviously have the weekly 20 down here around 34K, but we may be in for the lower end of this channel here that was 30,000, right? So I would think that if we lose last week's lows, this may come back down there. And so there's always two ways you can get involved on the long side, right? You can get involved on the long side when bulls start to show you that they're strong again. So like, remember what I just said, the bulls have a lot of work cut out for them, right? That would mean reclaiming a lot of levels and then starting to make higher lows. If that happens, I may start getting bullish on certain things again. Or the other way you can get involved on the long side is when everybody finally capitulates. So if this were to flush really hard down to the 30,000 level, I would definitely be looking at scooping up a lot of the Bitcoin related equities. Now keep in mind, some of the equities or some of the companies that are trading that are crypto related rely on a higher crypto price for them to actually be profitable. So make sure that you understand what the business is involved in that you're trading. One of the examples that comes to mind, I believe it's MSTR, which they just literally, it's a fund that just buys and buys and buys crypto, right? So like below a certain price, they're negative on their investment. Above a certain price, they're positive. So make sure you understand what the company actually does that you're looking at trading before you make any of those kinds of decisions. That's it for the broader market. Let's get into the sector analysis. Barchart.com as always. Let's head into our stock sector matrix. Short-term matrix. Now, this one is much different than what we've been seeing a lot of times, right? A lot of times, if the market was strong all week, you'll see everything green and we go, duh. This is a mixed bag, right? There's only a few names or a few sectors in here that had any strength. And so it's very important to point those ones out, right? You have your energy sector, financials. Those were the two top performers. Some of the other stuff got smoked, and it's not a surprise that a lot of it was the tech stuff, right? The staples are okay, obviously. So here's the reason I point some of these things out is because in certain stages of a market cycle, certain sectors perform better. And it is a little worrisome to see the staples and the utilities and the energies and things like that being the ones that have the strength. Meanwhile, the tech and stuff is very bearish. Just worth pointing out. Now, I do have the ETFs to go through real quick, and we will do that quickly. Let me get into them. The notes I wrote down. XRT, bears still in control. We talked about this last week. This push up into resistance was probably a really good area to get short on retail names that were also popping in the levels. There were quite a few. The DKS idea from last week missed my level by not a lot, and then it paid out a ton. Kind of an irritating, but it's okay. I mean, remember guys, the next best trade's always right around the corner. So you miss a trade, who cares? Next, okay? The next one I wanted to point out, financials. Now financials, if you recall, let me get the right one up. If you guys recall, when we came down like this, we said a lot of the same things that we were saying about retail now, and that is the bulls have a lot of work to do to get back to a place where I would get bullish. And what did they do? They did that, right? We talked about this last week and the week before, was the reclaiming of these levels and then starting to hold. And look what happens. Then you get these pushes. So if we contrast that with retail, you'll see exactly what I mean, it's night and day, right? Black and white. One, the bulls were able to reclaim and start pushing. This one, every time it pops back into those levels, they're having a lot of trouble. XLC, what was the other one I wanted to make a comment on? And I just put down that a pop back into 78, which is going to be your quarterly as well as the 50-day, should give us some good opportunities for shorts in that sector. I feel like any pop back into those levels is going to give back a lot of the move initially. Doesn't mean we don't reclaim and start going higher later, but I am just thinking ahead of myself in order to create the ability to spot ideas or opportunities. And the other one was XBI, and this one, even though it looks really bearish, right? Like it had this really long sideways channel, it lost it, it retested the underside of it and rejected. Zooming out, you really have to start thinking that this may be getting close to a major reversal area or a major turning point. Let's check out some of the higher time frames and just look at how far we've come down from all-time highs and coming into some really key support levels. It's hard for me, and this is a monthly chart, guys, so we're right into the monthly 50. I don't want to pick a bottom here, and that's not what I'm in the business of. I'm not trying to catch a falling knife, but I am 100% watching this for any signs of this finding support and starting to curl, because I think we are starting to get to a level where people are going to start noticing and saying, look, the biotech sector is really sold off and a lot of things are starting to look cheap. So that's all the notes I really had about the sector analysis this week. Let's get into the ideas. And remember, there's a lot of them this week, so I'm going to kind of try to move a little bit faster. Actually, I'm not even going to go to, let's just type the tickers in. So AMD is the first name, guys. Now remember, tech's been heavy, tech's been getting sold. And so this name, I know you might be confused as why it may fit into the strong stocks looking for continuation. It's because we still are pretty close to highs, and I do think a flush down into the annual pivot puts us right into the weekly 20. So I do want to be ready to scoop this on an emotional flush down into that 126.5, 127 area. So I do have it on watch, even though it's not necessarily one in a sector that has a lot of strength at the moment, or two, even being a strong acting stock. But I think if you see the lows here at 130.6 from December 14th, I feel like if we lose that low, which is, let's see, yeah, I already said it, 130.6. If we lose 130.6, it wouldn't surprise me to see this have that puke, have that emotional flush capitulation. And I want to be ready for it, because even if the stock stays heavy and wants to go lower, I feel like it's going to give a really good 2, 3, 4 point bounce somewhere in that range when it flushes down there. So I do have it on the list for that reason. Next name on the list is APO. And the main thing I've noticed about this stock is just how there's no way you can convince me there's not a buyer down here at this 67.80 to 68 level. It's come down here every time. You see the volume kicking up, and even though it's coming down to these levels, they're buying it back up. So I do want to have it on watch Monday to just see if it gives a quick flush down to 68 and then they buy it back up, because it's 1, 2, 3 days of selling. I think eventually we're going to get, those buyers are going to just hold that line, and we're going to get a push, a bigger push. Make sure, let's circle back around to the topic of this week's Sunday Prep, guys. The full trade plan. Me personally, I'm not going to be involved in this stock if we lose those lows. You can see that the buyers are showing up very, very close to the same level every time. That 67.75, 67.80, it's not getting below there, right? So we lose 67.50. I don't want you guys scratching your head and being like, I wonder if Ricky's still in this, because he's not. Ricky's gone, okay? Ricky has risk management. So that's the idea, and make sure you guys understand how to create a trade plan based on that. The next idea is JP Morgan, and a lot of the financial names could probably be played very similar. This one trades a lot of volume and has range, so that's the reason I picked this one. The level I'm looking to scoop this is 163.80, which is the weekly 20 and the 50 day, and it's also pretty much these tops here, which was the long trigger. And I feel like a flush down to these levels gets scooped up real quick, and may even possibly be able to be the type of trade where if it starts working, we could leave some on for a possible swing if it closes strong and you have cushion. You could lock some profit in on the day trade piece and keep a small piece on, because financials, if you recall that the XLF chart as well as the sector matrix, financials have been strong. And so you can look at like the GSs and the MSs. Whoops. I did not mean to go to a 1 second chart. You can look at MS, another beautiful chart, right? You could play Morgan Stanley very similar to the way I'm just pointing out the way I'll play JPM. Microsoft is on the list. And Microsoft, I just know at some point the buyers are going to circle back around to this name. They're not going to let this come down too low before they start realizing that it's a big discount on this. The level I'm looking at is that 305 area. 305.60 is what I wrote down. It's got this monthly pivot as well as a retest of this breakout area. I don't know. I actually have this feeling that it doesn't even come down there. I feel like maybe last week's lows are a good spot to put risk on and cut it if it breaks them. But I do want to try to be patient because the tech sector has been so heavy. I just want one more day of capitulation, get me down to that 305 area, let me put a trade on and manage my risk. If it fails, if it stays heavy, no problem cutting it, and I will look to re-enter right at that psychological 300 level. You have the annual pivot just below it. I would not hesitate to retry the trade at 300. And the last idea from this section is QCOM. And I want QCOM off the 50-day, guys. 174.60 is where I'm going to be looking to scoop this. I would cut it under these lows from December 20th. So I would be risking under 173.50. Call it that. So about a point of risk. You see that it closed on lows on Friday. So I'm hoping that it just has another little bit of flush, get everybody out, and then give us a nice bounce. It's actually been a very, very strong stock comparatively, right? So compare it to the tech sector, compare it to the communications sector, compare it to all its peers. I won't hesitate at all to buy this off the 50-day on a flush. So the next section is oversold reversion setups. The only name on the list this week is Salesforce, and it's not there yet, right? It's what have I written down? I wrote down 208-ish. So that puts us right down here into this last year's annual pivot and this monthly pivot. I don't know if we get down there. If we do, it's going to put us, if we were to extend this trend line down, it's going to put us somewhere in that pocket. It may want lower. 100%, guys. I am not going to be guessing a bottom on this. I would like to see capitulation. The lower the better, and I will wait to see lower highs on an intraday time frame, so I have set risk, not trying to just buy this and add as it comes lower. We've seen a lot of names where people have been doing that, and people just go, where the hell is the bottom on this name? Some of these names out there just appear to have no bottom. So I don't want to be involved in that game. That game is a fool's errand. So let's get into the short ideas. First section is weak stocks looking for continuation. The first name on my list is Snapchat. Snapchat, and a lot of these ideas, guys, you should be getting used to them, are the same thing, right? I'm just looking for a pop back into resistance to put a fade on. 45 to 46. Let's just call it 46 because the 20 days there. But you also have last quarter's quarterly pivot right up there in the high 45. So a spike up into those levels, I will be getting short Snap. And Twitter is very similar. And it's obviously, I know these are both social media names, so you don't have to trade both. I like to have a few names anyway in case one of them gets to the level and the other one doesn't. The level for Twitter for me is 43, and it's going to be a retest of the underside of this little trend line it broke, this little bear flag, as well as the 20-day. So very similar. AFRM, looking for 91.40 to 92. So basically the underside of the 200-day, and you can see, we can just draw this little line here, the lows that it snapped that got us down there, okay? Now this might be the type where it doesn't happen on Monday. Maybe we come lower, and then as the days go on, the 20-day creeps down here. The closer the 20-day gets to my level of my preferred entry level, the more I'm really going to like the trade. So if the 20-day comes down to 92 and you got the 200-day right there, and we pop back up into those levels, it's going to be a juicy short for me. Unity Software is the other name on this right here. 126.30 is the level I'm looking for, and I'll tell you how I got that. You can see the highs from Friday, and if obviously we can't see the next week's pivots yet, but if you go to a pivot calculator, you can calculate them. Next week's weekly pivot will be 126.40. So I really like that 126.30 to 126.50 area. I won't hesitate to re-enter. If this idea doesn't work, I will be re-entering up in the 131 area, which is these highs here as well. Actually, let me zoom out a little, draw you a nice little line here. That's the next spot for me if 126.30 does not work. All right, so that is it for the weak stocks looking for continuation. The last section that I typically do is overbought reversion setups, and there's two names I have on there. It's Allstate, and it's not your typical 52-week high, just getting really extended parabolic move that you typically see in this section for my Sunday preps. But it's really impossible for me to ignore all these tops over here and this quarterly pivot and the psychological round number of 130. So a spike up into 130, and I will be looking to fade Allstate. The next idea, or the last idea from that section, is actually Berkshire, the BRK.Bs. it's not there yet, and it's not just like I'm not trying to guess the bottom on Salesforce, on CRM. I'm not trying to guess the top on Berkshire. But there are levels such as the annual pivot at 325. 325 tends to be one of those psychological levels as well. And so if we were to gap up somehow on Monday morning and then get extension, the more extreme, the better. My edge in these trades lies in the extremity of it. So 325 is the first spot I'm looking at. Doesn't mean that it has to be there, right? It's gonna depend on where I start to see lower highs and where I see it start to look weak when it's been so strong, right? So that is it for the day trade ideas. Now, I told you guys I've got some swing ideas I'm going to bring to you this week. So let's start those. There are, let's see, 6 of them. Okay. So I want you guys to remember that these are swing ideas, and the way I enter them and risk is slightly different. And, you know, I will take smaller size because the risk is wider. My stop is wider, but the profit targets are much further out as well. And you have to understand that. So you can't really be entering these with the same kind of size you take your day trades with. And if you don't understand risk management, come over to True Trader. I'll get you squared away, all right, guys? BEKE. I just really like the look of this chart, the way it's starting to base. And it's, you know, I don't know when this base breaks. The longer a base builds, the better for me. And I honestly, for all I know, it doesn't break to the upside. If it breaks lower, it could come lower. You can see I have an alert set, and the alert is for 23. Over 23, and I think it's ready. It doesn't mean you don't necessarily look to buy dips down here in the 17 area with really tight risk. But with the swing trades, I tend to look for confirmation first, and then I'll buy dips afterwards because there's really no hurry. Honestly, like something can trigger, and I might not get long that name for a week or two after. So I'm looking for it to break 23, and then I'm trying to buy dips after. The next idea on this list is LUMN, and it's really, you know, I got my wife in this trade. She likes to buy stuff in her Robinhood account, and she actually does pretty well, which is, it blows my mind. But she got involved in this in the 12s, and it's acting great. I still have this alert set up here over, let's just call it over 1450. Over 1450, and we're going to be breaking out of this flag. And that's the point where I would look to get involved with this on dips back to the top of this trend line, right? So if you guys look at the weekly chart, I just like the look of this name. And in fact, for all these swing ideas, I'm going to get rid of the pivots because I don't really care much about them as far as swing trades are concerned. But yeah, this just has that gorgeous look. Reminds me a lot of like XOP, the oil ETF, the way that broke out, and it's just been behaving really well since. You'll see a lot of charts like that, and I love the look of these charts. You get a nice base. It's already, technically, guys, it's already a valid long, right? We came down, made the lows, pushed up, intermediate high, higher low. So this level where you have this pink line drawn, that is where it became valid. So in fact, on this one, you don't need it to trigger over 1450 to get involved. It would give you that confirmation of a possible continuation, but it's ready to buy anywhere on dips back down to the 20-day. Let's see if, yeah, anywhere into the 20-day area, and as low as the weekly 20, which puts you in the bottom of this channel. Granted, you're not really wrong till we go to new all-time low. So make sure you understand where your thesis is wrong and how to size accordingly so that you don't just get, you know, chopped out of a trade that ends up working. There's nothing worse than having an idea and just not being willing to give it the room to work. You have to understand where your idea is wrong and then size accordingly so that you don't stop out before you're actually wrong. Next ticker is STNE. I tweeted this one. Now technically it has broke this trend line here, but I don't care about trend lines. They're just rough guides for me. Remember, you'll hear me say that a lot. I just think that one of the things I pay attention to is the way the volume has really picked up on this name, and we are at key levels, right? These are new all-time lows, but the buyers are showing up again. We're holding levels. It's starting to base. And so I really am interested in this. And you know, technically on a weekly time frame, this did already trigger, right? We have a low, we pushed up, we made this intermediate high, pulled back, made a higher low, and then we broke it. Again, that kind of reminds me of like GE. We've talked about GE, the way that it triggered and then immediately slammed down. So for the reason that this technically triggered, and since it did that, it's just sold off, I'm not as excited to get involved in this one until I see the buyers show up again. I'm not really thrilled that after this move on January 3rd, we rolled right back over and lost the 20-day, and now we're stuffing the underside of the 20-day. So on this name here, I'm actually looking for this to push back maybe into 18, and then I want to see pullbacks hold above the 20-day before I even consider putting this one on. Las Vegas Sands is the next idea. And again, this one is just really starting to make this nice base down here. And it's not, you know, it hasn't triggered yet, but I'll set the alert right here. Basically over this level here, and I will look to buy dips with risk under the lows. So you have to understand, this trigger is set for basically, let's call it over 40. If Las Vegas Sands gets over 40, I'm looking to buy dips back into 36 with risk under 34. So 2 points of risk, but I feel like the upside is a lot more than 2 points. And that's the way these swings work for me. MGM, again, this is another casino, and this one's triggered. And you'll notice I have these are what I need to see, right? I need to see a low, I need to see the push up, the higher low, and then the break. Okay, so this one's triggered, and I've already drawn out the risk reward for you. I am looking to buy this as close to the 200-day as possible, and the risk goes under this low here from early December. Is it? Yeah, December 1st actually. So the risk for me is under 39, and I'm looking to get involved around 42. So again, we're looking at about 3 points of risk before you're actually wrong. But if you look, I mean, the risk reward's there. It's 2 to 1. It's a little more than 2 to 1. Maybe you can get even a lower entry, but I would like to see it hold the 200-day. That's another thing, right? So if I buy the 200-day, it's not going to be very convincing if it loses the 200-day and starts coming down here and flirting with lower levels immediately. I'd like to see the buyers show up there. The last idea on the swings, guys, is Duke Energy, and it needs to get above this 105 level, and I will get involved. I really like this one because the sector, right? So if we are doing what everybody on Twitter says and getting ready to go into a bear market and have a correction, you're going to want to be involved in the sectors that have the strength during those late market cycles, which is typically these utilities and the consumer staples and stuff like that. But I like this chart a lot. Really, really like the way this is shaping up, especially on this weekly, how you get this nice the way they bought this back up after it pushed back down, right? So yeah, basically 105, I think the trigger is over 105.20 is where the alert is set, and over that level, and I'll be looking to buy dips. And yeah, hopefully you guys like some of these swing ideas. Make sure you guys leave comments, not just in the chat, like the live chat that we have going on here in the live stream, but underneath the actual YouTube video, go leave some comments and let me know, like, do you like swing ideas? Do you want more of those? If not, we can always cut those out and stick to the day trade ideas. But that's all the ideas I had for this week, guys. So I'm gonna go ahead and look through some of these questions we may have. Irfan says, is it the big tech stocks that are driving NQ down? So the way the tech sector, especially the NQ and the ES work, well, I don't want to say NQ and ES because those are futures, right? But the Qs and the SPY, those work by, they're weighted. So Apple, Microsoft, Amazon, you know, there's a few really heavy weighted companies in those indexes, and so those ones, when they get heavy, those tend to bring the market in. Now they do have other ETFs that are equal weighting, right? And so you can go actually look at them and you'll see a kind of a better picture of like the overall health of the market versus when it's just like a few names that have been keeping us at all-time highs. 78 on XRT. I'm not sure if that's a question or if it's that, I believe. Let me look at the daily chart. Was that the level I was pointing out? 78. I'm not sure. So that's the weekly 20. Are you asking if that's a good spot for you to be looking for the retail sector to bounce? Because if so, that's exactly where I would be looking. I would be looking at, I'm sorry, it's the monthly 20. Yeah, the monthly 20 is at 78, 77.65, right? God, and that's an ugly monthly chart too. So I'm not sure if that was a question. Microsoft bounced off 6-month moving average. I know Goose uses the 6-month moving average. I personally don't, but I do see the value in it. And so it doesn't surprise me something like that would bounce there. But I really do want to see a retest of this level here, this 305. Again, it may not get there. I don't have a crystal ball, nor do I pretend to. Yes, the monthly on Duke does look good as well. I'll go ahead and pull that up real quick so you guys can see it. Yeah. So let me see, is there any more questions? I'm going to scroll up. Full plan, yep. Let's see this. CRM looks news related. You know what though? It's with everything being as heavy as it's been. I don't recall Salesforce having any sort of negative news out there. I can go check real quick. Last thing I'm seeing was insider selling. Any downgrades or anything? I think they're just coming in with the sector. To be honest with you, the tech's just been so heavy. But I do not recall any real negative headlines out there on Salesforce. For the big picture swing ideas, do you like to sell into strength to lock some gains along the way or wait till the final target? So let's use MGM as the example because I already had this out here. So on a trade like this, where I know where my first target is, I'm not selling anything. It's because you're not getting 2-to-1 unless you let it at least go to your first target. Because if it's not like you're gonna stop out halfway to your full stop, right? And we talked about. I always think this is so funny the way people will take profits early, but they'll never take part of their stop early. You'll never stop out like 3/4 early, right? Everybody always lets their stop go all the way to their full stop loss. For me personally, I need that first price target so that I'm getting that 2-to-1 to even begin with. But yes, I will take partial there, and then I will see if the trend wants to continue. Because a lot of times when you take all-time highs out, then you get an extended move. The trend continues, and you may get one of those exaggerated moves that you've hopefully heard a lot of people talk about this in the past. But some of these swings that can really get going, it only takes a few of those to really be the game changer for your account. Let's see. Thoughts on BYND at 68.80, 68 area if gap up. I love BYND for shorts. In fact, I shorted it a lot last week. I think 2 out of the 5 days last week I was short that name. I guess I'm going to turn the pivots back on for a second. Hold on. Let's see. And you're saying 68.80 to 68. Well, the thing is we closed up there, right? So, let me make sure I'm reading the question right. Because we're not gonna. Maybe you mean if the market gaps up. Because if if Beyond Meat gaps up, we're gonna be up here in the 73s to. Honestly, I would love to see the 50-day. If we go to 76, I'd be loading up short on BYND. And it's funny because I've always had this thing against them, considering like we went into lockdown and you couldn't find food at any of the grocery stores. All the meat was gone, all the milk was gone, all the except what was there? The plant-based meat. There was just, you could buy all the Beyond Meat you wanted, even when the grocery stores had completely empty shelves. Nobody eats this shit. So, Sometimes it catches momentum, sometimes it gets going, sometimes it becomes a meme stock. I don't know if you guys remember when that happened. That actually pissed me off because I had gotten short. It was right here, this big move. I got short into these levels of resistance and it gapped up on me, and it was all because Reddit, right? And I took a nice hit on that one. That pissed me off, but you got to remember, guys, this is the stock market and anything can happen, right? So I can sit here and tell you nobody eats Beyond Meat. Doesn't matter if you don't know how to manage your risk, okay? BIDU at 151, 150 area. Chinese stock, let's see. Are you talking about longs at these levels? Because BYND was already at the level you called, and this one is trading there too. Are we talking about shorts or... Oh, I think maybe you're asking about a long at those levels. I'm not going to buy Beyond Meat, that's for sure. And I'm not going to buy Baidu either. I'm staying away from these Chinese stocks. The only way I would entertain a long on Baidu is a hard emotional flush to 145, and I would scoop it for a quick bounce trade. That's it. Not touching anything else on the Chinese names except for quick bounces. Coin. So I don't mind discussing these, especially because I follow the Bitcoin. I definitely want to understand what trade plans may occur. Honestly, under last week's lows, this could really roll over. I see, we lose this trend line that it's been holding. Now listen, again, I always point this out. We breached that level, right? Doesn't mean anything to me. Didn't close under it, did it? But if we lose Thursday's lows, this could be a 215 in the blink of an eye. I would like to short it on a pop back to the 20-day. I don't know if we get it, but again, it's going to follow Bitcoin. So make sure you have that Bitcoin chart up if you're trading this. Let's see. Yogi, if you're long Berkshire, you're crushing it. Don't worry about me shorting it. Let's see here. I'm trying to get through some of these. Listen, if you eat Beyond Meat, don't take offense to what I'm saying. But I'm basing my comments off the fact that even when the grocery store was sold out of it, the shelving area for the plant-based meat was completely stocked. They couldn't sell out of it. Yeah, dude, it is crazy how high Beyond Meat got. Andres Baba 116. Again, it's a Chinese one, so just be very careful with those. Fubo and SoFi at current levels. I don't know about Fubo. I mean, I see the level as I understand why you see this level, but this has just been such a heavy stock. I mean, until pops into the 20-day don't act as a great short, I don't want to be long the name, right? So I need pops into the 20-day to stop stuffing. If this gets above the 20-day, pushes up, pulls back, makes a higher low, then I might start looking at longs on a name like Fubo. But let's be the kind of guys that like to trade the path of least resistance. Fubo's path of least resistance is down. So we should be shorting pops. That's the only thing I want to say about names like that. Like, don't fight the overall trend. If the South Asians are buying it, it has potential. Days. I don't. Benito's asking me to talk about ETH. Let me pull up my crypto stuff. I have not looked at the Ethereum stuff in a while. You know what though? It looks a lot like what I see on Bitcoin, which is that we lost this trend here, right? And then once we lost it, the pop back into the 20-day gave you that big stuff. First level I'd care about would be 2680s, which is the lows from here. So when I'm looking at these kinds of things, guys, the first thing I'm doing is my eyes gravitate to the major pivots. And when I say major pivots, I'm not talking about these pivot points you see on my chart. I'm talking about major pivots where the stock was coming down and then made a big turn and pushed up, right? So that is a major pivot. And then the next one you see is down here. So those are the real levels that I care about on something like this. Anything else is probably just noise to me. Hope that makes sense. Look at WAL on a pullback to, let's see, 116, 117. Well, first of all, let's see what's average. Now, you see the volume, and I mean, maybe you're talking about a swing trade. And swing trade, I feel like, yeah, maybe. It's been a strong stock. It's in an uptrend. We're trading near all-time highs, even when a lot of other stocks are getting crushed. But the volume, there's no way I can day trade something that trades 600,000 shares a day. And I'll tell you why. Take a look at the 1 minute chart. You see all those gaps in the 1 minute candles? There's nothing I can do with that, because one, you have the size so small, and you still, even with small size, like sometimes you'll just have to chase it out to the point where, you know, you might think you're risking 70 cents and you end up having to if you're long, you might end up having to hit the bid to get out and lose 50 extra cents on the trade. NVIDIA is going to be very similar to the AMD idea, guys. So AMD, right? We were saying if it loses these lows from December 14th, I see it flushing down to the weekly 20, or was it the monthly 20? I think it's the weekly 20. Let me check. Yeah, the weekly 20. And so NVIDIA's got a very similar chart and a very similar thing. We're flirting with these levels here, right? So the way I see NVIDIA is it either holds these levels and then we can push again, and it may actually be a great short on a pop back into the 20-day / 50-day area. But if it loses these lows, watch out below, probably coming down to 260, maybe even 250. 250 looks great. I love that annual pivot lined up with that psychological level, 250, right? And so, guys, I don't see a whole lot more questions, and I am probably going to wrap this up. You know, swing trades are really hard to start right now in terms of the tech sector. Obviously, that STNE is and that LUMN are tech stocks, but they're trading down at lows and making bases. Things that are like way up at highs and in the tech sector, and it's been heavy, is tough for me to look to put capital at risk up there unless some things change first. That doesn't mean that won't happen. It's just again, just another form of if this then. Yeah, thanks, Josh. What platform are you on? I'm getting super tired. Yeah, so this is these charts are TradingView, and I love them. And I was just like you, when you get a lot of volatility in the market, Thinkorswim gets really, really laggy, especially off the open. So like I still have Thinkorswim, but I just never use it. It's more of a backup. TradingView's become my go-to because it's much quicker, even when the volatility kicks up. Yeah, same, Yogi. Thanks. On trades, I may do a Twitter space, an AMC type thing. The funny part about it is I think a lot of you guys think that I'm looking to make fun of those guys or, you know, talk shit. I'm not. I would love to have some of these AMC bulls that actually have cohesive thoughts, not some of the conspiracy theory guys, but some of the like guys that actually know what the F they're talking about. Have some of them come on. We could have an actual back and forth dialogue that's respectful, and maybe we can, you know, agree to disagree on some things. But that's really where my head's at, because there's a lot of questions that I don't see these people address, and I posted them on Twitter last week, you know, things in regards to like, you know, a true short squeeze typically needs to involve the element of surprise, and there's just no element of surprise here with AMC. Like, everybody knows the story here. It's been going on forever. I feel like they're on a sinking ship, but again, I'm allowed to have my opinion, they're allowed to have theirs, and I'm not trying to come off as a know-it-all or arrogant. I'd rather have a open discussion with some guys that can be respectful and come to the table with some legitimate comments. Yeah, so, and again, those charts are TradingView, but I trade on Cobra, guys. Make sure if you are looking for a great broker, check out Cobra. I'm gonna wrap it up, guys. Everybody have a great weekend. If your football teams are still playing, get your football in. I'm going to go enjoy some family time. Love you all. See you guys tomorrow at the market. Peace.